DVP means delivery versus payment, and this concept is used in transactions where a product is expected to be delivered, and in this sense the delivery of the product is linked to the payment that is made to acquire the product. In the South African context, this is used in the securities market, where when transacting in equities, bonds, and money market instruments, the delivery of the equities or the bond or the money market is linked to the payment that is effected to acquire such bond or money market instrument or equities. And this culminated in a process where a system for clearing and settlement of securities operated by a company known as Trade had to be linked to the payment settlement system operated by the central bank, being the Reserve Bank. When looking at the property market, indeed the DVP concept can actually facilitate transacting in this market. In this respect, when sellers of property meet with buyers of such property, such transactions could be settled in a DVP format, where the delivery of the property would be linked to the payment of such property, and this indeed would bring efficiencies into the system. Should DVP be introduced in the property market, the first thing would be that the upgrade of systems that facilitate such transactions would be upgraded to ensure that they facilitate this arrangement. The first benefit that we will derive from this is the efficiency gains in terms of the flow of liquidity that will be introduced. In this sense, the parties that would be selling the property should receive their money efficiently, because as the property transfer is effected, the payment should happen, and we envisage that under such arrangements, efficiency gains should be experienced in the market. The second advantage would be the management of risk. When we link the transfer of the property with the payment, it actually eliminates the risk of loss of principal. That is, the party paying and not receiving the property, or the party parting with the property but not receiving the cash, because the two legs would be linked. So we envisage benefits for the market, benefit for the transacting party in that arrangement. I believe that the consumer would stand to benefit in terms of protection of the transaction. Both the payer and the seller should be protected under the arrangement, as the linking of the transfer and the payment brings security in the transacting party in terms of the property flowing from the seller to the buyer and the cash flowing from the buyer to the seller at the same time. For the market as a whole, or the financial sector broadly, this brings efficiency, because when we implement such a mechanism, it would actually bring liquidity gains in the system, because the sooner the liquidity flows from the one party to the other and flows around from one transacting party to the other, the benefit for the broader market as a whole. And in this essence, if one has to use an example, when parties transact in the economy, payments flow from one bank to the other. In one instance, Bank A pays Bank B. In the second instance, it is receiving money from Bank C, or it's receiving from Bank D. So the flow of the liquidity would be efficient under the DVP arrangement. From a regulatory perspective, as you will recognize, regulators are concerned about risk that is in the system. From the regulators overseeing the system, they are concerned about removing risk in the system. So in a DVP environment, the regulators are comfortable that the transactions that are taking place using safer mechanisms, where the parties in the transaction do not stand risk of loss of principal, either losing the transfer of the security or losing the transfer of the cash. But I cannot emphasize this enough. One of the risks that the overseers are concerned about is liquidity risk. That is the risk of the party that is in a transaction not being able to deliver. So in a DVP environment, we find that the efficient circulation of cash or the money improves the liquidity, and as such the overseers would actually embrace this because it's enhancing the management of liquidity risk. The design of the DVP model in the securities market should be interrogated by all the stakeholders. Adopting the escrow model or ensuring that the money that is effecting the payment is moving directly from the bank of the payer directly to the bank of the property seller could be under consideration. But I believe that whatever mechanism that we consider that ensures that we minimize the risk should be the one that is adopted. So the escrow model needs to be interrogated, or a direct model where the money leaves the bank of the buyer and is credited directly to the bank of the seller. That arrangement could also work, but we need to interrogate the best model that could be implemented for that arrangement. In our experience, we would support that greatly, because we believe when a business model is shaped to address a business problem, all the stakeholders that are impacted needs to be brought together to go through the business process such that at the end we would find that all the requirements of the various parties are met. And as such, I would encourage a process where a national working group is established, but we should ensure that all the relevant stakeholders are included so that the business requirements relating to the flow of property transactions can be mapped to this DVP concept such that at the end it will satisfy the requirements of all parties involved. In a property transaction, it is indeed understood that when the property is settled, there's various parties that needs to be settled in that transaction, including the seller, including the municipalities that could be involved, including the revenue authorities. So we need to consider all parties that could be impacted by the transaction and ensure that all their requirements are incorporated. And as such, a national working group composed of all the relevant stakeholders would be one of the critical success factors of the project. Just generally, we believe that PEXSA is on the right path. We believe that the business need that they've identified is one that needs to be pursued. And as I indicated, in pursuit of this objective, all the relevant parties need to be brought together and they need to cooperate and collaborate to ensure that this realization of the success, which would be to the benefit of all. I believe in bringing all the parties together, you need someone that can be at the center, and I believe PEXSA is the right party that can do that. In my view, I feel that PEXSA has made its objective to ensure that they address a business need in the property market, and I believe the business area that they aiming to address does indeed need a business solution. And as such, their approach of reaching out to parties that could actually work together in addressing the problem statement that they've identified is a good approach. And as such, I believe that they should work on ensuring that they collaborate and call for collaboration with the other stakeholders in the realization of a credible solution that would address the business need that they've identified. I believe that there's definitely a need to improve the transfer of property, and their approach of ensuring that a model is put together that is aligned to DVP could be the solution that could yield the desired outcome.